But we begin with two of the biggest tech calls on Wall Street today. Nvidia upgraded to buy from neutral at D.A. Davidson. The price target also raised to $210 a share. It was $190 before. D.A. Davidson's also downgrading Apple to a neutral rating from a prior buy. The price target there stays at $250 a share. Let's now bring in the analyst behind both of those calls. Gil Luria is managing director at D.A. Davidson, covers a lot of ground in technology. Gil, thank you very much for being with us here on Power Lunch. Let's go one by one, and then we'll delve a little bit further into the discussion. Let's talk Nvidia first. This has been a consensus trade, I think, for quite some time now. Nvidia has been the poster child of AI. So what's behind the upgrade, and why exactly do it now after we've seen the kind of run that we've seen?
Well, that's right. It has been a consensus, and it should be. But a couple of things have happened as far as we're concerned. A couple of things are converging. One is we are exceedingly optimistic about the adoption of AI and the needs for AI compute. There's some worry about why isn't it implemented in organizations. We don't think that matters. We are bringing AI to the workplace. I sat in my car and during a commute and learned about government subsidies of chips from Grok. I was able to download a 400-page document and extract the piece of information I need. My neighbor, the lawyer, is not only replacing paralegals and associates, but she's now getting strategic advice from ChatGPT. So that's all happening. But what's happened at the same time is people have tried to expand the AI trade away from Nvidia and Microsoft to a point where now Nvidia is the least expensive in the AI trade. They're only trading at 28 times next year's earnings. Oracle's trading at 50 times, 50 on a much less, on a much more questionable story. And yet Nvidia is now trading at 28 times. Apple is trading at 28 times. Nvidia is going to grow earnings 40%. Apple is going to grow earnings 10%. So between our optimism for AI and the fact that the AI trade has rotated away from Nvidia, we think this is the time to focus back on Nvidia.
All right, so the risk-reward setup, given that, is going to be one that you're focusing on. And like you said, 50, half 100, that's nothing to shake a stick at there. All right, so Gil, that's the one side. Let's take us through the AI argument for why Apple deserves to be downgraded to a neutral or hold type rating.
We were so excited a year ago after Worldwide Developer Conference because Apple has the assets to be the leader in how consumers use AI. They have all our information. They have it secure. They have it organized. After Worldwide Developer Conference last June, they showed us a path towards how they're going to help us do that. And here we are more than a year later, and they've executed on very small pieces of that. We wanted to give them one last chance with the iPhone announcement to show us that we were going to be using AI through the iPhone and using iPhone's capabilities to get more powerful AI solutions, and they didn't deliver. What that means is we are at least a year away from them being able to deliver on those things. And in the meantime, again, it's trading at a premium. It's understandable that there's a premium in Apple. It's so defensive. We all know that 5 years from now, anybody that's using an Apple today will use an Apple, will use some sort of Apple device, will be on Apple services, will be buying more from Apple. That makes it very defensive. But we can't get away from the fact that if revenue only grows low single digits, if earnings only grow high single digits, paying 28 times for that, when you can pay 28 times for Nvidia, which is growing so much faster, is very hard to explain. A year from now, if iPhone 17 incorporates a lot more AI capabilities, we can revisit. But that's outside the investment time horizon right now.
All right, so that's the investment time horizon. And you laid out the case for what you would do or what you would need to see to be more bullish on Apple. Is there anything, though, that can get investors excited in this kind of investment time horizon? Would there be incremental steps you could see in the coming quarters that would say, hey, you know what, maybe we got to change our thesis on Apple?
If they do make some breakthroughs around allowing us to use Apple as an agentic device, as an assistant, then we would get more excited. If we were to see that promise of, hey, Siri, can you book me a restaurant reservation near the concert with my sons so we can go celebrate their birthday, and she'd know all that and be able to execute on that. By the way, she just started talking back to me. If that was to happen in this next year, we would revisit. But until that does happen, we're going to wait for them to execute well on that front. It's not, they haven't shown us a sign that that's imminent.